And we want to take you live now to Kyiv. You can probably hear there what is a siren now sounding in the capital there. The Kyiv mayor also urging citizens to stay home after explosions were heard in the capital. Let's just listen in for a moment there. Grounds in Kyiv. Of course, we are following this breaking news for you and will continue to bring you analysis and market reaction. We're speaking of market reaction now, and shares of the Russian aluminum giant Rusal in Hong Kong have been falling significantly throughout the course of this week, and again falling today, down more than 10% right now. Of course, you won't see any action in Russian stocks after the Moscow exchange also announced that it was suspending all trading until further notice. The ruble also plunging to its lowest level against the dollar now in 6 years. Of course, we're tracking the reaction across Asian equity markets for you as well, where we continue to see significant losses playing out across the markets here. You can see Japan's Nikkei down by around 2%, Australia down by 3%. In Singapore, off by 3%. The Kospi also down 2.5% there. Mainland stocks in China down by more than 2% as well. So risk off very much playing out in these markets right now. The same story also applies for US equity market futures. Let's have a look and see how this is also shaping up right now, because we see losses expected when trading resumes stateside. The Dow called down by 630 points now. The Nasdaq off by more than 300. The S&P 500 down 80. Cryptos also getting hit significantly hard here, with Bitcoin falling below 35,000 US dollars here. 34,865 is the level. You can see off by around 7%. At the same time, gold also catching a bid as investors reduce risk and move into safety. Gold has been catching bids through the course of this week as the headlines continue to develop. Gold at 1,939 US an ounce, up 1.7%. Let's bring in Gunther Wester now. He's head of asset allocation at Odo BHF Asset Management, joining us from Geneva. And Gunther, as I was just explaining, we are seeing a significant cross-asset market reaction to the headlines now developing out of Ukraine. Just your reaction to what we're seeing right now. Investors no doubt reducing risk at this point and also moving into safety plays.
Yeah, good morning. It's actually probably not the time to be a hero. So I expect this flight into quality, into safe havens to continue. Actually, the market is quite at the mercy of headlines, and we currently don't know which scenario emerges in the Ukraine conflict. Is it a full-scale invasion? Is it something like Mr. Putin trying to regain the hold of the Donbas region, or is it a conflict which is it's only a bit more moderate one? So we don't know yet, and this is certainly a time for being very cautious here.
So is this a knee-jerk reaction in your view, or a signal of deeper losses to come? Of course, we don't know what's going to happen next, but Gunther, perhaps just explain the possible scenarios from this point on.
Yeah, we have outlined before that, we have outlined 3 scenarios. One would be that Russia just moves into the existing Luhansk and Donetsk region without further expansion. The second scenario, which I think is more likely, that they try to be more expensive and gain control over the whole Donbas region, and also ensuring maybe a land corridor to Crimea. And the third one is the complete invasion of the Ukraine, which I think is too costly for Mr. Putin, but we don't know yet. I think given the market underlyings right now, scenario 1 and even scenario second could be digested after initial weakness, but we have to have more information, and so I would be very cautious right now.